guys, welcome to class. We are going to start with chapter 7 today. This is managerial accounting, and we are going to be talking about activity-based costing. Now, it's a great tool. Not a lot of companies use it because it's expensive to implement. But activity-based costing is a costing method that's designed to help managers utilize cost information for strategic and other decisions that affect capacity and therefore fixed as well as variable costs. It's used as a supplement to rather than a replacement for the usual costing systems. First, we're going to start with understanding the difference between traditional costing and ABC costing. ABC can be used in manufacturing and non-manufacturing settings, because it can be assigned to products and in that respect has what we call a cause and effect basis. So it can be used in either method. ABC can assign values to sales commissions, shipping costs, and warranty repair costs associated to specific products. Now, some manufacturing costs can be excluded from product costs. ABC excludes organization sustaining costs and idle capacity costs from the product. ABC's different from our traditional costing methods because numerous overhead cost pools get used. So it's a little more involved. Not complicated, but detailed. Each ABC cost pool has their own unique measure of activity, while traditional cost systems usually rely on direct labor hours or machine hours to allocate all overhead costs to products. Direct labor and machine hours work correctly when changes in the quantity of the base are correlated with changes in the overhead costs being assigned using the base. Relying exclusively on direct labor hours or machine hours to assign overhead costs to products has come under increased scrutiny since, on an economy-wide basis, direct labor and overhead costs have been moving in opposite directions, and the variety of products produced by companies has increased. So here, we can have an activity, which is some event that causes use of resources. And then we can have an activity cost pool where it's like a bucket that these costs related to a single activity measure get accumulated, put into. So an activity measure is the term or the cost driver to use to refer to an activity measure. And we utilize an allocation base in this activity-based costing system. Two common types of activities: a transaction driver and a duration driver. The transaction driver is just a count of the number of times an activity happens, where a duration driver is a measure of the amount of time needed for an activity. Traditional costing systems rely on allocation basis driven by volume. But ABC defines 5 levels of activity that largely do not relate to the volume of units produced. We've got unit level activities. We've got batch level activities. We've got product level activities, organization sustaining activities, and customer level activities. Okay? With manufacturing companies, this is how we usually classify them. To have activity-based costing implemented, to make it successful, you've got to have strong top support from the management. Because the change that's involved with this activity-based system is more involved. If employees continue to be evaluated and rewarded using a traditional method, they're going to get the understanding that this activity-based costing isn't as important, and they're not going to use it. So I've heard it is successful for those companies that do implement it. The company makes 2 types of automobile batteries. There's a Sure Start standard battery, and there's a Long Life Deluxe battery. Baxter reported its first loss ever. So what's going on? So Baxter decided to get this activity-based costing team going, and they used various pools and measures. For pools, they took customer orders, and again, they'll measure number of customer orders. They took a pool of design changes and measured how many design changes there were. They have a pool of order size based on machine hours, customer relations based on the number of active customers, and other, who knows what that particular one is. So for customer orders, they assigned all cost of resources that are consumed by taking and processing customer orders. For design changes, they assigned all costs of resources consumed by customers that have requested design changes. For order size, they assigned all costs of resources consumed as a consequence of the number of units produced. Customer relations, where they assigned costs associated with maintaining relationships with customers. And then other assigned organization sustaining cost and unused capacity cost. Let's look at exercise 7.1. The following activities occur at Greenwich Corporation, a company that manufactures a variety of products. So we have 8 different activities, and we have to classify each of the activities above as a unit level, batch level, product level, or organization sustaining activity. I'm just going to give you a minute to look at these. Okay. So receive raw materials from suppliers. It's going to be at a batch level. Manage parts inventory is at a product level. Do rough milling work, that's at a unit level. Interview and process new employees in the personnel department, that's at an organization level. Design new products, product level. Perform periodic preventative maintenance on general use equipment, organization sustaining level. Use the general factory building, organization sustaining. And then issue purchase orders where a job is going to be at a batch level. Let's look at this one, guys. Various activities at MingCorp, a manufacturing company, are listed below. Each activity has been classified as a unit level, batch level, product level, or customer level activity. Complete the table providing an example of an activity measure for each of these activities. So here we have direct labor workers assemble a product, but we can measure it by direct labor hours, can't we? Here, products are designed by engineers. We could measure it by number of new products designed or hours of design time. Next, equipment is set up. Numbers of setups, setup hours. Next, machines are used to shape and cut materials. Numbers of units processed and machine hours. Monthly bills are sent out to regular customers. Maybe the number of bills sent and the time preparing those bills. Materials are moved from the receiving dock to the production lines. Number of loads transferred and the time. And then all completed units are inspected for defects. Number of units inspected and the defect, number of hours related to this activity. Oh my goodness, guys, I'm so sorry. How'd that happen? Okay. Now, maybe something else. There it is. Okay. So, in all cases, except for direct labor hours, in Part A, 2 activities measures are listed. The first is a transaction driver, and the other one is a duration driver, time, duration driver. Transaction drivers are simple counts. Duration drivers are measured in the amount of time required to perform an activity. Usually, duration drivers are more accurate measures of the consumption of resources than transaction drivers are going to be, but they take more effort to record. Next objective, we're going to look at assigning cost to cost pools. So here we have our Baxter battery. And we see that the direct materials, the direct labor, and shipping are excluded because Baxter Battery's existing cost system can directly trace these costs to products or customer orders. So the following distribution of resource consumption is determined across these activity cost pools. it tells us for each of these items, like with customer orders, 30% of indirect factory wages are linked to customer orders. 30% of indirect factory wages are linked with design changes. And then 20% related to the order size, 10 and 10 for customer relations and others. So you can see each one of these factory equipment depreciation, that predominant pool is linked with order size, same with factory utilities. So each of these assigns a weight for the various costs. Then, in assigning overhead cost to activity pool costs, what they do is if they take that indirect factory wages and they know the link is 30% that gets consumed by customer orders, they can take 30% of those factory indirect factory wages and allocate that just to customer orders. We can do the same for the factory equipment depreciation. Since 20% is consumed by customer orders, we can take 20% of those costs and flow them to specifically the customer orders. So now you have these pools and you can assign these costs to the pools. So if we look here at exercise 7.7, the operations vice president of Security Home Bank has been interested in investigating the efficiency of the bank's operations. She's been particularly concerned about the cost of handling routine transactions at the bank and wants to compare these costs at the bank's various branches. If the branches with the most efficient operations can be identified, then their methods can be looked at and replicated elsewhere. While the bank maintains meticulous records of wages and other costs, there hasn't been an attempt to show how those costs are related to the various services provided by the bank. The operations vice president has asked your help in conducting an activity-based costing study of bank operations. In particular, she would like to know the cost of opening an account, the cost of processing deposits and withdrawals, and the cost of processing other customer transactions. So here, the Westfield branch has submitted the following cost data. They give us the teller's wages in total, the assistant branch manager's salary, the branch manager's salary, and the total of these salaries. Virtually all other costs of the branch, rent, depreciation, utilities, are organization sustaining costs that cannot be meaningfully assigned to individual customer transactions, like depositing checks. In addition to the cost data above, the employees of the Westfield branch have been interviewed concerning how their time was distributed last year across the activities included in the activity-based costing study. The results of these interviews are shown here. The teller wages related to opening accounts were at 5%, processing and deposits are at 65%, processing other transactions are at 20%, and other activities are at 10%. And then our assistant branch manager, 15% is opening accounts, 5% processing deposits, 30% processing other customer transactions. You can see this. So the job here is to prepare the first stage allocation for activity-based study. So what are we going to do? We're going to take the wages. The teller wages are at 160,000, and 65% of those teller wages are spent processing of deposits and withdrawals. So we're going to take the 160,000 times 65%, or give 104,000 to the processing, deposits, and withdrawals. You'll see each one works that way. The processing other customer transactions, 20% of the teller's wages will go over 32,000 will go to that area. So this shows how you go about computing the first stage allocation of the various different salaries, various activities, and assigning costs to those various activities. Okay. How do we then compute activity rates for cost pools? The ABC team determines that Baxter Battery will have these total activities for each activity cost pool. We've got customer orders at 10,000, 4,000 design changes, 800,000 machine hours, and 2,000 customers served. So now the team can compute individual activity rates by dividing the total cost for each activity by these activity levels. So here you see customer order, the costs were $4,520,000. But if we've got 10,000 orders, we can figure out what the cost is per order. We can do that for design changes. Order size, we have $5,200,000 in cost related to that. With machine hours being at 800,000, we can determine the cost per machine hour. And then customer relations. You take those costs associated with customer relations and you figure out the number of customers. You can figure how much that cost breaks down per customer. So here, we have our direct materials, we have our direct labor, and we have our shipping costs, which can be traced to the objects. Now, the overhead costs are put into that first stage allocation that we looked at earlier. The second stage allocation breaks them down per order unit, per machine hour, per customer, per changes, the design changes. So here we see the manager of the Westfield branch has provided the following data concerning the transactions of the branch during the past year. We've got different activities, and we've got the number of total activities. So opening accounts, we have 500 new accounts opened. Processing deposits and withdrawals, we did 100,000 of those. Processing other customer transactions, we had 5,000 other processes. Then with opening accounts, we broke it down to find out it costs $26.75 per each new account. Processing deposits and withdrawals, it cost $1.24 per one of those transactions. And then the other transactions were $11.80 per transaction. Using the first stage allocation and the data on the previous slide, compute the activity rates for the activity-based costing system. And what do these tell us about this branch? So again, by taking them and figuring out the percentage and then breaking them down to the total amounts, we show opening accounts. We've got a total cost here of $23,250. With 500 accounts open, it shows it's taking, the cost is $46.50 per account that gets opened. We see per deposit or withdrawal of $1.08, and then other transactions of $12.50. They look higher than what we saw. The cost of opening an account at Westfield branch looks higher than the lowest cost branch, $46.50 versus $26.75. On the other hand, the cost of processing deposits and withdrawals is lower than at the lowest cost branch. So the Westfield branch was making those transactions cheaper. But the other type of transactions that were happening at Westfield branch was costing more. So other branches could learn something from Westfield regarding the processing deposits and withdrawals. And Westfield could maybe learn from others about opening accounts. Is the cost of opening accounts at Westfield high because of the involvement of the assistant branch manager in this activity? Maybe it's better for the tellers to open new accounts, as they probably are doing at the other branches. The apparent differences in the costs of these activities could be due to inaccuracies of the reports and how they spend their time, or it could be other things. The Westfield branch may purposely spend more time with new customers in order to win their loyalty. The higher cost of opening new accounts at the Westfield branch could be justified by the future benefits because the customers are happy. But it's helpful to see this stuff and at least have something to go on to be able to compare with other branches. So now we can assign costs to the cost object with the second stage allocation. With our Baxter Battery Company, we've got two batteries, the Sure Start and the Long Life. Sure Start doesn't require any new design resources. There's 800,000 batteries ordered with 4,000 separate orders. And each Sure Start requires 36 minutes of machine for a total of 480,000 machine hours. Now look at the Long Life. It does require new design resources. 400,000 batteries are ordered with 6,000 separate orders. And 4,000 custom designs get prepared. Whereas the Sure Start needed 36 minutes of machine time, this one needs 48 minutes of machine time for 320,000 total machine hours. So if you're looking here at the Sure Start versus the Long Life, you see the costs associated with the Sure Start, and then you see the costs associated with the Long Life. So we've got $9,240,000 of costs that aren't being assigned. We've got the $4,928,000 and the $7,832,000 that are being assigned. Now, if we look at just one of these 2,000 customers, Acme Auto Parts has placed a total of 12 orders. 4 orders for long lives require a design change. So you see here, the orders, we have 8 orders for 60 sure starts, and then we have 4 orders for 50 long lives. We see the sure starts are 480 sure starts required at 288 machine hours because of 8 orders at 60. The long lives, we have 200 long lives required at 160 machine hours. So again, we can take the activity rate times the activity to come up with our cost regarding customer orders, design changes, the order size, and the customer relations. This is the cost associated just with one customer, Acme Auto Parts. Here, let's look at this exercise 7-9. Durban Metal Products of the Republic of South Africa makes specialty metal parts used in applications ranging from the cutting edges of bulldozer blades to replacement parts for Land Rovers. The company uses an activity-based costing system for internal decision-making purposes. The company has 4 activity cost pools shown below. The managing director of the company would like information concerning the cost of the recently completed order for heavy-duty trailer axles. The order required 200 direct labor hours, 4 hours of product testing, and 2 sales calls. So what's the total overhead cost assigned to the order for the heavy-duty trailer axles? Okay, so what do we do here? We take the order size by direct labor hour, and we have 200 direct labor hours, which gives us the 3370. Our customer orders, we have a $320 per customer order, just one customer order here. Product testing, we have 4 product testing hours at $89 per hour. 2 sales calls at $1,090 each. So the total cost just associated with this order shows it's $6,226. Now, how then do we determine product and customer margins? So we've got to get information regarding the sales and the costs for these products. We show the sure start sales and the long life sales. And then we see our various costs for direct materials, direct labor, and the shipping. Okay. So if we look at those costs associated with the specific batteries, we've got to look at cost assignments regarding each of these products. So again, we see our sure start orders are 1,808,000. For sure starts for long lives, they're 2712. There are no design changes with the sure starts, but there are with the long lives. And then we see the order sizes. So then we need to break it down. With sure starts, we've got our product margin with the sales and then the different costs. We see our product margin here is 8,372,000. But look at the long lives, guys. They're losing money. Okay. Product margins can be reconciled with the company's net operating income by breaking it down in this way. So they've already lost money without even other items that aren't even being assigned to these products. So the first step in looking at the Acme Auto Parts customer margin is to get its information. We've got its sales to custom Acme and its costs to Acme. So we've got the sales and the cost, and then we have customer orders, the product designs, the order size, and the number of customer relations. So then we look and see if we break it down by those activities, we're really only getting $384 as a margin for this particular customer. It's just a different way of looking at it, guys. Again, we compute product margin by gathering the sales and direct costs. We take that and break it by machine hours, come up with our machine hours, and then we allocate them to each of those products. Ultimately, this is how we come up with our product margins. Okay. So what's the difference in going this route versus our traditional product costs? Using the traditional product margins, we show Sure Start is at 6,900,000 and long lives are at 2,100,000. But if we look at them by doing it through activity-based costing, you clearly see the long lives don't have a positive margin. Okay. So when you look at them doing the traditional method and you look at them going ABC, you're coming up with very different margins. The traditional cost system overcosts the Sure Starts, but it reports a lower product margin for this product. And it undercosts the long lives, and reports a higher product margin for this product. So doing it under traditional costs makes it as though we're doing great with the long lives. Doing it under ABC gives us a different picture. There are reasons why they're different. Traditional costing allocates all manufacturing overhead to products. ABC costing only assigns manufacturing costs consumed by products to those products. Traditional costing allocates all manufacturing overhead using volume-related allocation, but ABC uses non-volume related allocation basis. Also, when we're dealing with traditional costing, it disregards selling and administrative expenses because they're assumed to be a period expense. But ABC costing takes those, even though they're non-manufacturing overhead costs, and they put them in the pools. So as you see, this gets used in conjunction with other costing methods. It's trying to focus on activities that can help to eliminate waste, decrease processing time, and ultimately reduce defects. Most companies won't use ABC for external reporting because they're too detailed for external reports. It'd be too hard to change the whole company system. But most importantly, ABC is not conforming to generally accepted accounting principles. There are limitations to activity-based costing. It takes a lot of resources to get it going and to keep it going. They want to allocate all costs to products, but it doesn't always look it that way. It does not conform to GAAP. The potential misinterpretation of unfamiliar numbers is present. And it's just got different reports that most people aren't familiar with. Here we have thermal rising ink. It makes paragliders for sale through specialty sporting goods stores. The company has a standard paraglider model, but also makes custom designed paragliders. Management has designed an activity-based costing system with the following activity cost pools. We've got order size, and we've got number of direct labor hours and how much the rate is per direct labor hour. Customer orders, we have $320 per customer order. Product testing, $89 per testing hour. And selling, we've got $1,090 per sales call. Management would like an analysis of the profitability of one customer, Big Sky Outfitters, which has ordered the following products over the last 12 months. So it ordered 20 standard model gliders, 3 custom design gliders. The standard model was one order, the custom design were 3 separate orders, 3 separate designs. We've got the direct labor hours per glider and the selling price per glider, and ultimately the direct material costs per glider. Using the company's activity-based costing system, compute the customer margin of Big Sky Outfitters. Okay, so here we've got the sales are $44,200 based on 20 standard models and 3 customer designed. Then we've got our direct material costs for both, the direct labor, supporting direct labor, processing, designing. We end up with a margin of only $1,144. They're not charging enough for those custom gliders. Advanced Products Corporation has supplied the following data from its activity-based costing system. We've got our wages, overhead costs, then we've got the activity pool, the activity measure by direct labor hours or orders or customers. Got them all here. And we break down what the various costs are used for based on activities. And it says during the year, Advanced Products completed 1 order for a new customer, Shenzhen Enterprises. This customer did not order any other products during the year. So we've got our units ordered, 10 of them, direct labor hours, the cost per unit to sell, the direct materials per unit, and the direct labor per unit. Okay. Now, 1 second. Okay. Using Exhibit 7.6 as a guide, prepare a report showing the first stage allocations of overhead costs. Then we use 7.7. We'll compute the activity rates. We'll calculate the total overhead costs. And then we'll calculate the customer margin. Okay. So here we are in the first stage allocation. Then we break it into the various cost pools and come up with our rates. So you see our support direct labor, 150,000 divided by our 20,000 hours gives us $750 per hour. Order processing is $250 per order. And customer support is $400 per customer. Compute the overhead costs. We've got a total here of $800. $750 for direct labor hour times 20 direct labor hours, 1 order, and 1 customer, $800. Then when we look at our sales and our different costs, look at our customer margin. We're losing money when we compute it in this fashion. There you have it. Let's go over some of the homework. Unless there's any questions. Any questions, guys?